Okay, so for this second video, since I'm just now going ahead and get started with my YouTube career, basically just getting on here and just trading and going live and doing live trades with my live account, not my simulated account. Let's learn about US dollar versus JPY because that'll be what this channel is going to be primarily focused on in the trading journey. For all of those interested in Forex trading, um, there are many instruments you could trade in the Forex markets, whether it be the spot markets, which are basically CFDs, contracts for differences, um, whether it be Forex futures options, whatever it is. Like I said in my first video, when I was going over my trading view watch list, Forex is the most liquid market in the world. So let's go to Chat GPT and let's do some learning. Let's learn about US dollar JPY for all of those who don't know what US dollar JPY is or what the pair means. Let's go to Chat GPT and let's do some Cliff Notes type learning. Okay. Now, let's see. Of course, you see the top I say, let's learn about US dollar JPY. So I wanted to do this. That way there is no mistaking about what this is. This is just going to be an overview. So US dollar JPY, the essential traders breakdown, what US dollar JPY represents. UJ shows how many Japanese yen you need to buy $1. Okay. If UJ equals 150, that means $1 equals 150 yen. Okay. If price goes up, the US dollar is strengthening or the JPY is weakening. When it says if price goes up, if you're looking at any kind of chart, a line chart, a bar chart, X and O chart, or a Japanese candlestick chart, which I primarily use, if the price is going up, US dollar is strengthening versus the US yen or the Japanese yen, or if it's going down, the yen is actually strengthening versus the US dollar, which it says in the third bullet point right there under question 1 or under answer 1. JPY is famous for being a safe haven currency. I'll give a brief explanation of certain bullet points that we come to, and we're not going to drag this thing out. This is just going to be a US dollar JPY overview. That way, at any point in time, if you want to gain an understanding of what's going on with what I'm trading, you could come back and refer to this video. So JPY is famous for being a safe haven currency, extremely sensitive to interest rate differentials, and moved heavily by Bank of Japan policy, which is unlike any other major central bank. So safe haven currency basically means that uh, in uncertain times, people who have the know-how or have the ability to move assets around, they will go into a lot of different yen investment type vehicles. Just to put it like that, just to put it plainly and in a layman's way, safe haven means that in times of uncertainty or heavy volatility, anything could be going on. The Japanese yen is a good currency to hold assets in, okay? Because it's really not going to lose a lot of value in the basket of other world currencies or other things that are going on in the global economy. Okay, let's move on. Why US yen moves? The 4 core drivers. Okay, 1, interest rate differentials. Most important factor. UJ is primarily driven by the difference between US interest rates and Japanese interest rates. When U.S. interest rates rise, UJ usually goes up. When U.S. rates fall, UJ usually goes down. Okay, so we're in the season of rate cuts right now. We're going into December 2025. And it clearly states to you when U.S. rates fall, UJ usually goes down, which means that um, the value of the yen is rising versus the dollar. Okay. All right. So when the Federal Reserve cuts interest rates and makes your savings accounts and all of these other different, things that you try to drive your money into and try to earn a higher percentage yield, what happens is it weakens the dollar. Okay. And in the scheme of the pair, the US yen pair, it weakens the dollar versus the yen. Okay. So this is the logic behind the carry trade, where traders borrow cheap yen and buy higher yielding US dollar assets. Okay. Again, this is the logic behind the carry trade, where traders borrow cheap yen and buy higher yielding US dollar assets. Yield is the most powerful word in that small paragraph, okay, or in that sentence. Now, number two is the Bank of Japan policy. The BOJ often keeps interest rates at zero or negative, intervenes directly in the FX market, rare but massive. And when Japan intervenes, US dollar yen can drop 500 to 1,000 pips in one day. This has happened multiple times. And if you don't know, a pip is a point, like a fractional point that moves whole points or whole numbers in the quotation of the pair. Okay, which is something that we'll go over, the quotations and doing all of this thing. Three, U.S. economic data. UJ reacts instantly to non-farm payrolls, NFP, CPI, um, which is basically the price index, consumer price index. You have PCE, okay, you have FOMC decisions, and you have treasury yields. Like I said in my first video when I was talking about the 10-year bond yields, um, it reacts to fluctuations in the 10-year bond yield like it is its brother. Okay, so if the bond yields are rising rapidly or falling rapidly, the quotation will react to that rise or fall, and the value of the dollar versus the yen will do so in its particular manner. So if U.S. yields rise, U.S. dollar JPY pumps, right? So it acts in accordance to what the 10-year bond yield does. Okay. So let's go back. Four, risk sentiment, safe haven behavior. JPY strengthens when global fear increases. Like I said earlier, JPY strengthens when global fear increases. When markets crash, war breaks out, economic uncertainty grows. US dollar yen falls because big money buys yen. Okay? That's self-explanatory. How US yen behaves on different time frames. Okay, this matches perfectly with your marginal line strategy using the 200 EMA channels, which you'll see live. Of course, ChatGPT remembers everything that you type into it, all of your search queries and things like that, things that you may ask it. So it is speaking about this trading strategy that I use to trade the pair, the US yen pair, and we're going to definitely be all into that. So the 5 and the 15-minute scalping time frames, very reactive to Tokyo and London session liquidity shifts. The Tokyo session starts at about 8 p.m. Eastern Standard Time, and the London session starts at 3 a.m. Eastern Standard Time. Ideal for catching 140 to 300 pip weekly swing waves broken into scalps. Okay, which basically is telling you that you honestly can have between 140 to 300 points in us that the pair is swinging up and down or just in one direction in a trend. And shit, I've seen it do 300 points in a day. So it could be a day, not just a week. So think about the potential profits that are available to you trading this. And like I said in my other video, I love this pair because this pair gives you so many money making opportunities. So many. It's just a stable pair to trade. Fake outs common during Asia session early hours. Okay, I wouldn't consider them fake outs. I would consider a lot of it does retrace a lot. It does retrace a lot. So you have to weather certain storms when trading UJ. And from my experience, you can actually take you can actually catch trades going in those retracement times, and you can make money when it's retracing or when it's correcting itself. Those what they call fake outs are not actual, like, bad things to have on that chart, because they can be 150 points, 200 point. uh Excuse me. Yeah. So your 30-minute and your 1 hour intraday trend structure. I don't trade my trend structure off my 30-minute or my 1 hour. I use my 30-minute and my 1 hour as more confirming. I'll use my 5 and my 15 as my intraday trend and my scalp, and actually my swing that could last 2 or 3 days or 4 days or whatever. So, okay, what these bullet points are talking about provides the best view of trend continuation, of course, on your 30-minute and 1 hour, golden and death crosses, the exponential moving averages, the EMAs that I use are 921.50, are extremely clean on US yen, extremely clean. Um, your EMA channels will show perfect compression before breakouts. Of course, you'll see that. And this chat GPT is pretty much answering my query because of um, how many questions I have typed in, just brainstorming and looking for certain answers in particular. So it's answering me in kind, in likeness. Okay, so 4 hour in your daily, you're looking at your macro trend, your overall trend, your big boy trend. This pair trends extremely cleanly for months, and it will. This pair trends extremely cleanly for months. So perfect for medium term swing trades. Most institutional entries come from these time frames. Okay, you should be able to understand that clearly already. Oh, okay. It's late. It's 12:45 a.m. I'm doing this. Um, okay, so we have UJ volatility profile. Your UJ has clear volatility cycles by session. Tokyo session, slow but steady, traps early intraday traders. Yes, it does. Good for building position trades. Your London session, you'll have strong breakouts. Highest volume session for UJ is the London session, which begins at 3 a.m. The New York session, massive moves when U.S. data releases, of course, often sets the daily high or low And after we go through this first part, I'll pull up the trading economics calendar on the internet, and we'll briefly go over that bullet point right there. Um, the data release bullet point. So your typical ADR, your average daily range, 90 to 150 points on normal days, 200 to 400 points on major news days. Like I said, the thing could damn near move 500 points. Like, come on, man. Profit potential, man. It's the most, man, if you can master trading UJ, you're going to get wealthy trading UJ, and then you can deploy your money and employ your money in so many other different instruments and create all of this, passive income. And let me digress for a second, just for 1 second. I don't care how many jobs you have, I don't care how many businesses you have. If you have to physically put in your labor and you have to physically be somewhere in this place and that place, and you people are burning yourselves out, you need to get in the money game. This is a cash business. You can deploy your cash in 100,000 different ways. You don't even have time to even do 20 or 30 different things without the need for massive amount of assistance. When you trade and you invest and you combine the two, and trading is about building capital. Trading is not about gambling. It's not about taking guesses. These are highly educated, highly analytical things that you're doing. Trading. When you're investing for the intermediate to the medium to the long term. You're trying to buy and hold, and you're trying to, reinvest and do all these different things. Um, Forex allows you the opportunity to be able to accomplish a lot of your income goals, because you can, like I said, build your capital, your liquid capital, trading Forex, doing it the right way, having patience, taking your time, waiting for your setups, waiting for your confirmations, and then taking your trade. Um, it allows that. And then you can start buying dividend stocks, put together a dividend portfolio, put together all these different little things, invest in treasury bonds and invest in muni bonds, and just do all these different things, employ your money 10,000 different ways. You can't be 10,000 different places physically, but your money can. Your money is global. Money is the bitch that never sleeps. It's what Michael Douglas said in the movie, um, in the second Wall Street movie. So that was just my quick digression. Let's go on to number 5. Who really controls UJ institutional flow? Okay, the big players that move UJ are the BOJ, the Japanese Ministry of Finance, the Federal Reserve, the U.S. Treasury, major U.S. banks such as Citi and J.P. Morgan, Japanese mega banks, MUFG, SMBC Capital, Mizuho, hedge funds, and macro funds. This pair is dominated by macro traders, not retail. Okay, and I'm a retail trader, and you're a retail trader. So you're basically playing and swimming in the water with the biggest boys out there. All right, the people who got trillions and multi billions at their disposal. Okay, how to trade UJ effectively. You already trade all the the JPY pairs. You're using your EMAs. Here's how UJ fits into your strategy. So basically, it's directly talking to me about what it is that I already have talked to ChatGPT about. I'm not really gonna go over those bullets because you're gonna see those bullets in action. Let's go to number 7. The US JPY trading personalities you must know. When yen is weak, UJ tends or trends like a freight train. When yen is weak, meaning if the chart that you're watching is going up, UJ trends like a freight train. And I'm going to show you guys so much of that. We're going to be doing this thing live every day, and we're going to be going over this stuff. You know, it's not going to be no Discord. I don't have time to be building. Well, I have time, but I'm not that person. Log in, come to YouTube, get on the live channel. You know, it's going to be, everything's going to be happening live. We're not going to be doing any Discords and all of that goofy stuff. It's just too much stuff for you to keep up with me. Go to somebody else's Discord, do whatever it is they're doing, listen to what they're doing, pay whatever it is that that they're saying to pay, um, to join their Discord and do all these different things and brag and all of that. But we're gonna keep it raw over here. Okay. Um, when BOJ intervenes, the chart looks like a flash crash. Okay. So that basically means it's like it plummets if the BOJ intervenes, which means the dollar is weakening and the yen is strengthening. And the Bank of Japan doesn't intervene often. So when they do, look out below. Um, so here's the bottom, and it's just saying, are you ready to go deeper? And blah, 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 blah. So that's just basically an overview of the UJ, which is my pair. I also like to trade. I also like to trade the gold. I also like to trade oil, the Brent, and the I think it's the WTI. It's WTI and Brent. So it's West Texas and it's Brent. Okay, so I do like to trade those. You have to have a lot of money on your American brokerage account. Like if I was trading offshore, um, you basically can trade anything you want. They make it available to you, but uh, from me to you, I've had so many experiences, bad experiences, trading with offshore brokerages. I don't even do it anymore. I just rather utilize the American brokerages, take my 50 to 1 and trade and make my money. At least I know my money is safe. At least I know my money is backed by the full faith and credit of the United States government. If anything happens, there's regulatory agencies and regulatory bodies that I can, appeal to, file my grievances with. You can't do that if you're trading offshore with a brokerage on St. Grenadines. Okay, I've been there, I've done that. It hasn't been a good experience. It's trading offshore. So that is my advice to you. Stay away from offshore. If you are US based, go through either Oanda, Tasty FX, or Forex.com. Um, all you need is 50 to 1. You're going to make your money if you know what you're doing. If you're following some people who have a good strategy, a clean strategy, and they're proving that they can earn money on a daily basis, just keep it US based. Have your protection. You want your protective measures in place when you're trading, because this is a big market and you can become wealthy trading Forex. It's going to be quiet wealth, but you can do it. Okay, so this is what I wanted to do. I wanted to go to trading economics. Let's go to trading economics. Let's go to trading economics. Okay, I know you guys see my stuff up here. Let's see. Trading economics calendar. Okay, let's go over this calendar real quick. So we have our trading economics calendar. You see these red days? So these are basically, you see the name of the website is Trading Economics. It's the Trading Economics website calendar. Okay, so this is where if you're not using this, you're not trading. So it is what it is. All right, this is what gives you all of your most critical global economic releases. Okay, so where we have Friday, November 21st. Um, so all of these things have come out already. Let's see. There's the result. The first line is the result here, actual, previous, consensus, and your forecast line. Okay, so to your left over here will be, you're going to have your flag, your country flag of what country is coming out with critical information. Red days, when there's the red box surrounding the release time, that is critical information. If you're trading in a currency pair that is having a red day release, my advice is to sit back and wait for all of the volatility to slow down or die down before you start entering trades again or start analyzing it again, because it could just go crazy on you. Just depends on which pair you are trading. Um, so if we're looking at right now, so let's say 3 a.m., you have your Great Britain, your retail sales month over month. Of course, that already came out. So those are the results. And then we have Denmark, you see 4:30. So all of your red days will be the days that you're pretty much paying attention to. These days are going to move your markets. So for Friday, which was yesterday, we had a bunch of Fed speak. We had S&P Global Composite, PMI Flash, S&P Global manufacturing PMI flash. You had Michigan come out. You had wholesale inventories. You had Baker Hughes. Okay, so these are just economic releases that move markets, that everybody in the world who's in the money game, no matter what the money game is you're in, they're all paying attention to it, whether it's stocks, bonds, whatever. Everybody's paying attention to this trading economics stuff. If you're not using trading economics calendar, you're not a trader. So you're going to probably see people who come in here and maybe glance at the video, but I have not seen any traders put out videos showing this information. Either they don't know or they're gatekeeping it or whatever. But you're going to start seeing people put this information out, because that's what people do in America. They take what you put out and they run with what you expose initially, and they try to make it their own without giving you credit, and that is okay. Who cares? Because this is global and it's free. So we're going to jump down to Monday, November 24th, and let's see what information is coming out. Red days. I pretty much skip over all of this stuff because you have South Africa, excuse me. You have Mexico. You have the Eurozone. You have Canada, France. Of course, you have the United States. You have the Koreans. You have Brazil. You have all the global industrialized um, information coming out on this calendar. So let's see if we have any red days coming up soon for United States, which I know Tuesday we do. We have PPI month over month at 9:30, November the 25th. So at 9:30 a.m. you have PPI month over month, retail sales month over month, core PPI month over month. The main two that are going to move the markets are the release of the PPI, Producer Price Index, month over month for September. Um, and I think that got changed. I'm not sure. I have to go on the Bureau of Labor Statistics website. That's another website that most traders use to catch their breaking news, and because all of this stuff also goes through the BLS website. That BLS website is the Bureau of Labor Statistics. So I think that release has been changed or canceled, or I can't remember. I think they're going to release it for, I think they're going to come with November's PPI. But these numbers move markets. They move currency markets and they move stock markets. They move all the markets. They create volatility in the markets. Okay, so we got all of this. We got Redbug, we got retail sales year over year, PPI year over year, PPIX food, energy, and trade, PPIX food, energy, and trade month over month and year over year. So, of course, okay. And then at 10 o'clock, you got house price. So I kind of like, I make sure that I'm abreast of my calendar, and I make sure I know what the hell is going on, what the hell is coming out. Okay, before I even look at my charts every day, I look at this and make sure I I know that I'm not going into a trading environment that is, hey, I don't want to get caught up in a trade, and then if I'm on the wrong side, my shit just gets flushed out. I either get a stop loss hit or whatever, because you don't know what direction the market is going to go in once the information comes out. Okay. Most of the times, if it's a US beat, which is like they beat the consensus number that could be coming out, the the charts usually go up. They skyrocket up. Or if it's a miss, they're going to skyrocket down. So you just don't know if it's going to be a beat or a miss. And there is no hedging in Forex, in US based brokerage firms. There's no hedging. So you can only take one side of the trade, which basically is you can't buy and sell and make money going both ways at the same time. Okay. Let's see. Wednesday, November 26th, we go down. We see a red day at 9:30 for durable goods orders month over month. You got initial jobless claims for November, not October. So, we pay attention to this. We try not to be in any trades. You got crude oil, stocks change. You got EIA coming up on Wednesday, before Thanksgiving, the day before Thanksgiving, actually. So yeah, it's a lot of information gonna start coming out. So yeah, that was just basically quick overview of U.S. yen, a little education about U.S. yen, and we come over here to the trading economics calendar, and then we got a quick little rundown of our red days and what information comes out, and this is what traders use. So, all right, I'm gonna go ahead and cut this video, and thank you for watching.